Hello, how are you? So today I'm going to do the stocks, which is the Rocket. Yes, the Rocket Companies Inc. And this is the pretty very new IPO. Just 2 days ago, uh, the company is listed on the Nasdaq, and the ticker name is RKT. So what's the agenda? The agenda is I'll go over the companies, I'll go over its financials, whatever I have found, and I'll go over it, and then I'll also go what are the risk factors based on the company overviews, or it can be from by understanding the business, right? Is there any dividend for the company? And then we'll form the opinion whether this is good for our long-term investment perspective or not. So this is the agenda. So keep you guys stay connected, and let's see to this interesting, exciting journey. Little bit about the introduction about myself. Myself is Pramod Kumar. I'm a CFA charter holder and FRM certified. In my channel, I does the two things. First, if I have enough data available and it interests me, I do the stock valuation. How do the stock valuation? I use the three models in net pricing model, EBITDA model, and the free cash flow models. Basically, and then try and also see the company overviews and other stuff. But you basically using these models and come up with the pricing of the company. And another playlist you'll find where I'll just go over all the other information and try to analyze the stock if it's good or not. So if you want, you can check it out on as well. And if please give a thumbs up, and let's get started without further delay. Okay, so let me put myself on hide so we can see that. Okay, so here is it. So what is this company is all about? This company is based in Detroit based company, and major business is basically it's provide the mortgages or loan and all. What it's trying to do is basically it's trying to provide the digital experience, but not that's what the company pitches, right? And but behind the scene, basically they provide all kinds, just like any other bank or servicing companies, for example mortgages, rights, or that's what their range of services for I have included. So for example financial services like mortgages, or they also have website like Rocket Homes. They provide the title insurance. So pretty much very old style business what it's, and they wrap into the package that okay, I am doing a little bit online and all. I haven't seen any like AI or any other kind of a fintech revolutions when I have reading the company which they have submitted to the SEC. But overall, that's what this company is about. But the company does pitch that this company has grown significantly, right? From recently they published 2 days ago on IPO, but the company exists long before. So their Rocket Mortgage has now 1 trillion in homes loans since its inception, right? And their market share is increasing 19% over the last 10 years, right? So per year basis, 19%. That's a very big in terms of the market share. And now with this 2020 in the time of Corona, and when this they come up with this IPO. Okay, so that's hopefully you understand from the bigger picture of the company. So right, so now let's say okay, let's go to the financial, right? So okay, for financial, let me go to the Yahoo Finance. Okay, so here if you can see here, this is if I go to the chart and just want to, oops, what happened here? Virus. Okay, the price right now, some things, yeah. So as you notice, this is just the 1 day old, right? So this is the 1 day. Yeah, it comes around 6th of August and 7th, and then we have weekend, right? So the price basically the launch at $18, and then from there the price jumps to 24 and 25 $0.90. Right now it's trading at 24.90, right? Let me close this. That's right. Okay, let's look into the when I look into the financial in the Yahoo Finance, I got some 3-year finance. So I'll just depend upon this. I haven't seen because after IPO they just 2 days, so they haven't officially submitted anything. But that's what I have found here. So over the years, I have seen, this is in thousands, number in thousand, the increase in terms of the revenue, right? And if you can see here, the basic EPS is mm, uh, very very low right now, honestly, right? But overall, I think if I go, let's go to the cash flow statement, right? How's the cash is doing. So from the uh, free cash flow perspective, the company is not doing very well. You can see this is 310 and then 7 million and 4 million, and these are negative. And this is not good, honestly. Why? Because the company business is very closely correlated with the banks, right? And they need to preserve the cash. And if the cash is negative, I'm not sure. Maybe that's, and if you can see from their finance operating activity, the cash is negative. It was positive in 18, but again in 17 and 19, which or up to now it's negative. But so far they have raised issues, more cash, so that's what is. But pretty much, if somebody's just generating the mortgage and all, so they should have a good in terms of the liquidity and cash flow based on uh, the the mortgage payment, right, or the personal payment. So that's on the finance side. Let's see on the risk side, right? So what are the risks or challenges now we can face for this company? Okay, so I'll close this one. So I have write it very nicely here, so you can take a stop and screenshot as well, so it will be is clear. So first thing is that when I was reading the company which information when they filed to SEC, that the COVID-19 pandemic poses unique challenges to the business, right? Of course, because their business is most like a banks, and banks uh, they have tightened most of the people, they don't pay the mortgages and all. So I assume because they are also providing the mortgages, as on the first slide we found, again, they might have suffer the same challenges, right? And if the second wave come, I assume this business also hit as well. The second thing, what on the risk side is, the success and growth of the business will depend upon the ability and able to adapt and implement technology changes. So what they're trying to say here is, because they have only have an interface on the online and the website, and they mostly pay to the search engines uh, to come to their website so they can do a business, not like any brick and mortar stores like for a bank and other kind of institutions which has a reputations, right, for and a long history. So people naturally will go there, or the, I'm not sure how on the mortgage agents if they have something like that, but haven't seen much. But maybe I missed it, right? So I'll give that a benefit of doubt. Again, on the third point, which they have mentioned, is the loan originations and servicing revenues are heavily. Yeah, so basically their main market right now is the US, and right now the US projection and the macro level economic projections is not doing well, right? So if they can only issue the loan if the housing market does well, right, especially from the mortgage perspective, because that's their main business. And also, if the interest rate keep going down, we have to think from that perspective, right? If the interest rate goes down, then how they can make a money, that is spread, right? So that's another problem for those loan books kind of company. Okay, the another one is, this is the intense competition business, right? So this business has banks, and so many people are coming there and interrupt the loan business, so they want to go there. uh, right, you just type and you'll get the loan, right? So not only from the mortgage perspective, but not from the mortgage, but from the other perspective, personal loans and credit cards and all. They are not, I don't think so they are in the credit card, but definitely I see they have the personal loan and the rocket, which name as a rocket loan. The one of the main problem with these personal loan, these are not secure, right? As if you go to the mortgages, these are secure collaterals by the house, so that's need to be taken care as well. Okay, the next thing is okay, they I have yeah, the dividends, they are not paying dividends. What's the it's so bad, right? Because the business model is honestly is mimicking a bank, right? But why not you're paying the dividend, right? you should pay the dividend, right? To be competitive. Why people should buy your stocks or share, right? They should have some reason for it, right? So, but again, I have checked and looked that right now the board says it doesn't. Maybe in the future, the board decided of the company. I'm not sure. So yeah, so that's it. So that's from there. So pretty much my view on this talk is it's none other than just mimicking a cloning of the some part of the banks which originate the loans and services the loan, and then also cloning of the personal side as well. But the worst, and they don't have any brick and mortar. But at least I'm not I haven't seen, because that's what the pitching is, more online and trying to put the brand. But because of the coronavirus and all, and they are also not paying dividend, right? So mostly, why is somebody need to go there when they have a very strong presence of the bank and they can get the dividends and they have a long history? So you make a call. For me, this is not a fintech. If it's they have come up with some kind of a fintech, I think yeah, then like for example Lemonade, I did a few when the Lemonade IPO launches. That time it's just they cut the middleman by use the AI chat box, right? So that's a revolution there, and I like that on that side. But in this one, I'm not sure. So let me know what you think about this, how the investor community think about the stocks. If you want me to cover any other stocks, please put in the comment as well. And please, if thanks for your time, but do give a thumbs and like up to this video. It really appreciate it. On that, it motivates me to make more of this video. And if you want me to uh, uh, check out my channel for another stocks, if you want uh, looking for anything. Okay, thanks for it, and bye for now.